Episode 569, Trading Justice Podcast. Matt and Mark with you on a Sunday morning. I lost an hour's sleep, Matt. Do you even realize that occurred to you last night?
I feel it this morning, but no, I did not. I did know we went through daylight savings, but at the same time, I didn't feel it. I was just like, oh, I could use another hour's sleep right now.
I didn't know until like I'd been up for 2 hours, and then of course you look at the sun, you're like, something's off.
Yeah, like I'm a little too tired for what I get for my normal sleep here.
You know, something's off. The sun patterns. Okay, that just occurred. All right, so, that's how bears have felt every day for the last 4 months in everything. Like, something's off. I don't know what to do.
Bears have felt that since 2009.
So we're gonna break it down. But Matt, how are you doing? Other than losing an hour's sleep?
Doing good. Lost an hour's sleep. Still ready to get at it here in the podcast this week. Got a lot to talk about here today. Just going to do a simple walkthrough through the market here today. The last couple of weeks in the podcast, we've taken a deep dive on some important topics. Let's take an easy journey through the market this week.
Yeah, no, indeed. And let's start with gold. Oftentimes we'll save gold towards the end of our Market Skyline feature, but that is not going to be the case in this podcast. We're going to get right at it. Matt, this was a move this week that is very similar to the type of moves you see in growth stocks when they take a lift off. When you see these parabolic type moves where you don't even come down and touch the 5 EMA on the daily chart, you just lift off. And in order to not touch the 5 EMA for an entire week, that means the intraday chart didn't give an inch, ever.
And it did not at all. The entire week was up on gold. We had the breakout out of the mid tier from a week and a half ago. That just has not slowed down. We did the last 2 podcasts talking about the reasons why this is happening right now. And obviously, the price action so far in the last week and a half has been very aggressive to the bull side. You're going through a little bit of parabolic upward movement in price in the gold areas of the market right now. When you're looking at gold's kind of left the station here from a pure technical perspective, but from a fundamental perspective, I've been saying for the last 15 years, build a position. I haven't changed my mentality towards that, regardless of whatever the price is. From a pure technical perspective, though, you might want to allow gold to settle down a little bit. Typically, gold does not have a tendency to run aggressively like a tech stock, for example. It will. Gold can certainly catch some momentum, but oftentimes it will slow down and get right back into its normal behavior. What is interesting, though, about the gold conversation right now, Mark, on this parabolic uptrend over the last week and a half, and I'm not going to, retell the stabilization story above 2K. Obviously, anybody that's listening to us for a long time knows that conversation. And
and let me give a 10-second recap of that.
Yeah, go ahead.
In case this is the first. It is if gold holds above 2,000 for an extended period of time, 2,000 is likely the new floor because it had never done that in its history. It did that.
And you had the patterns going into it that were very, very compelling. We've talked about the quality nature of support holding 2K multiple different times. And so not surprised that now we are seeing a little bit of liftoff. But I think one of the most impressive things about this gold move is the increasing volume over the last 6 trading sessions, Mark. When you're seeing over the last 6 trading sessions, despite the fact that your upward movement in prices is quite outlandish at this point, you've had increasing volume every single day over the last 6 trading sessions. You have increasing volume. And not only do you have a slight increasing volume, you have legitimate massive increases in volume. And on one day that, the Fed announces something, that's not shocking. On one day you get the labor market news, that's not shocking. But there's a lot of boring days in that 6 days where you're not getting a hot economic report. You're not getting an algorithm love. That shows me there's investors here. That shows me the gold bugs here. That shows me the traders are here. But more importantly, that shows me that institutions
Yeah,
are.
no, yeah, because institutions did not come into this move heavy on gold. They came in
The
really
opposite.
light,
The opposite.
really light.
Institutions are historically very light on gold ownership. And when you see increasing volume in the marketplace in the number 3 commodity in the world, that's not you and me pushing paper here, bro. That's not, obviously the central banks live here, but they don't live in the gold futures market.
Yeah, that's the thing. Is I saw some individuals talk about, well, it could be central bank. I'm like, no,
not in the futures,
not in the futures market. And central banks have been hoarding gold for the last 18 straight months.
When we're talking about the central bank, they're not trading futures.
They're not playing the breakout, people.
They're buying gold. They're buying bars. That's what they're doing. So no, this is institutional money coming in. And institutional money, when it comes in, it doesn't come out immediately, Mark. Goldman Sachs, Bank of America, Wells Fargo, I don't care, name your institution. When they make a move, they're making a move to rotate a certain degree of their portfolio. They're not swing trading. They're not day trading. They're looking at something else. And it does feel like, to me, based on the price action, based on the volume, based on all the conversations we've had on gold over the course of the last, not 6 days, but over the course of the last 6 months, it does look like institutions are finally caving in against the dollar and buying gold as a protectionary asset class right now.
Yeah, no, indeed. And so, like last week I mentioned that, like, just from a covered call perspective, I was going to start the week uncovered and end the week uncovered on GDX, the miners, right? Who have, I mean, gold's up here. GDX has quite the divergence trying to play catch up. GDX is a little bit different than gold itself, right? The gold miner is a little bit different. I think you play them more technically maybe right now than gold itself, which you just own for a long-term perspective and don't mess around with. Would you agree with that statement generally?
I do. And I typically do agree with that when you're talking about, gold itself, whether it's /GC in the futures, whether it's GLD as an ETF.
Whether it is little physical gold sitting in your
gold itself, obviously. I do see that as a park and stash, a little bit more fundamental, belief system playing out on those. Obviously, gold owners are owning it for a variety of different reasons, inflation being one of those. And, we get the CPI report that we'll talk about here in a second, but we do get that coming up on deck. There's been a little bit of concern on double dip inflation. Does that lead into stagflation? That's obviously very positive for gold. I'll also say this, and I've said this for about as long as I can remember, Mark. The pausing conversation was very positive. Pausing at the central bank was very positive for gold. Reducing interest rates is extremely bullish for gold. Yeah. Because all of a sudden now you get that cross impact on the dollar coming down, gold going up. And it does look like the Fed is going to start lowering interest rates this year. Obviously, some of that is getting priced in, but it does look like the Fed is committed to reducing interest rates this year. But to answer specifically your question, yes, on GDX, the gold miners themselves, I don't think you can treat them with a pure fundamental approach like you do gold, because they get impacted by gold, but they also get impacted by the market itself. They get impacted by the basic material space. They can really drive with the market instead of gold itself. And so technically on GDX, I typically do anchor against the technical conversation on GDX, and I anchor against the fundamental conversation on gold. Does that make sense?
No, it absolutely does. I mean, if gold's going to 2,400, gold miners are going higher, right? But I do think you treat gold miners technically.
But they won't go 1-to-1 with gold.
No,
right? That's not what they do. They're even less correlated than energy stocks is to crude oil, in my opinion. But Mark, the argument for GDX is a historical argument on
Yeah.
catching up to what gold has been doing. When you look at the long-term trends on gold, for example, and you're looking at gold on a monthly chart, you're talking about an all-time breakout here, Mark. And when you're looking at those monthly charts, yeah, on the daily chart, completely parabolic. It looks like it left the station. On other time frames, Mark, this thing looks absolutely knockout beautiful, like we just broke out of prolonged years of consolidation.
Because you just broke out of prolonged years of consolidation. That's why it looks like that.
And so it looks really, really, really good. Obviously, it looks like it wants to run. Mark, I wouldn't be shocked to see a 24 handle here. I wouldn't be shocked to see a 25 handle here.
This move, because like it is very easy on this one to be like, well, gold breaks out and then it gives it up, right? Like, oh, you have a strong move, it gives it up. I don't know about this time. Like
again, anything can happen, right? Anything can happen, but when you're looking at all those signs, increasing volume, multiple time frame breakout, the economic conversation in the last month and a half has been one on soft economic landing, but potentially a little bit of concerning inflationary data. That's all positive for gold. That's all positive for gold. I'm very bullish on gold.
Yeah, I know. In the case,
when it comes to GDX, though, you asked the question. GDX, gold has broken out of its all-time high. Looks like it wants to run. GDX's all-time high is $67. Currently, GDX is staring down the barrel at $30. And so you have, and this is the argument on gold miners, that gold miners, if the move-in gold is real, which we believe it is, if the move-in gold is real, the miners have to catch up over time, because what's going to happen is their revenues are going to go up.
Because they're going to,
they'll make more money selling.
They'll make more money
related products, right? And so
they will make
revenues go up over time, and so you have that argument of catching up.
It's just very simple. It is. I mean, you think about a move from 2,000 to 2,400, which is not some crazy. That's a 20%. Gold miners do not have to produce 1 ounce of expense. It's all extra gravy.
All the same.
It's all extra gravy.
It's all the same. So here on gold miners, what I'm looking at this week is a really simple technical story that needs to play out. That's it. It's a really simple technical story that if you keep your focus on the daily chart here, you can see it a little bit more than when you look at multiple time frames, because multiple time frames are really, really mixed on gold, on GDX right now. Remember, we've been living underneath a lot of things on the gold miners. But when you look at the daily chart, there's a level that really stands out to me, quite frankly, that you can't see on other time frames. And with people with experience trading GDX components or cash flowing on GDX components, they're going to understand this saga as much as what I'm going to say here. But the $30 number is a significant whole number for GDX. It has played a role multiple different times, acting as a short-term resistance. In fact, when we were dealing with a pretty aggressive head and shoulders formation back last year, you had multiple times where the market tried to punch up in parabolic uptrends, one very similar in October to what we're going through right now, up, looked like it wanted to break that $30 handle and got double tapped and came right back down. You've seen that scenario play out a few times right at that $30 number. And so when I'm looking at the $30 number and I got case studies I can anchor against of the past, it just tells me I need to see some development here, that I don't want to necessarily chase GDX and gold miners after what have we seen in the last week and a half in the gold miners? Up 4 points against 26, up 12, 13, 14% in the last week and a half. Well, if we're going to get another 12, 13, 14% movement in the gold miners here, Mark, I do think it's going to come with a little bit of development. And development Could be one of two things.
And you want it to come with development.
Oh,
if
you
you
do
if
not
you
want to
own
be chasing gold miners above $30 because again, you're kind of in an overextended situation, and getting into the miners at an overextended situation is never something I
it
want to
hasn't
personally sign up for.
it's just difficult. It's just
It
difficult.
just is. They don't move like that. But in terms of the specific pattern you'd like to see here, and I said it in the halftime report on Friday, I said it in the halftime report on Thursday, but you want to see a high base here. You want to see it get cleaned up around $30. You don't want to see any volatility to the downside. You want to see the market play defense this week against that $30 handle, and you want to get that breakout getting secured. And so I'm looking for a little bit of pattern development this week in GDX, high bases, flag-based patterns. Now, one key component that is different this time around versus the last time we came into that $30 handle mark, the case study last October, is you're really above everything short-term moving average on the daily chart. Yeah, and so you do open up a little bit on the daily chart above 30. And so in terms of the patterns that could develop here, specifically in GDX components, and I just want to be very clear about that regarding the GDX components, but what you could see here play out is if the momentum continues, you could see a violation of 30, and then I would be looking for the snapback to $30. That's number one. So if we see the continuation of momentum above 30, I don't think chasing it is the wisest approach. I would be patient, wait on a flag, wait on a retracement, wait on that 90 MA. I know sometimes patience is difficult, but patience pays in the marketplace. And so if you do break 30 here, just give it a little bit of time. Let it come back down. I do think we'll get a better handle against a breakout with momentum. The second scenario that you could see play out here, once again, is just what we talked about in terms of that high base. We get a little bit of consolidation. We clean up that $30 handle, and we get that really beautiful multiple time frame breakout situation against the $30. And then the third one, Mark, would just be a standard retracement, a standard flag-based pattern where you don't give up the 200-day moving average on the daily chart, and you allow that 90 MA to kiss up against the pivot of support. And if you don't know what I just said, come join us on the Halftime Report every day. We break it down every day on the Halftime Report on Tackle Train's YouTube channel. But it looks good here, Chuck. Chuck, we just need to see a little bit of development here.
Yeah, I know. And adding to,
one question for you. This is very important for me. I know you left it uncovered last week. I left it uncovered last week. I am going to cover at 30. What's your thoughts?
I'm going to get some token credit at around 32, 33.
When I'm in 30, I'm not covering at 30. That's too tight.
Oh, yeah.
I'll cover it like 31, 32, but I will cover.
I'm going to leave part of the position uncovered, and then probably on half of the position get some token credit.
I like it.
Because listen,
a partial cover with a 30 delta contract type thing.
30, 25, something like that. Just something,
nothing too aggressive. So
no.
If you were looking at that type of mentality, let's say you owned 1,000 shares of GDX, just hypothetically, okay?
Mm-hmm.
So let's say you own 1,000 shares of GDX. A partial cover at this point would be, say, all right, let's cover 500 shares of GDX. And on the 500 shares we're covering of GDX, let's cover it a lower delta contract somewhere around 32 here with 40 days out, bring in a little bit less cash flow, but you still allow yourself to get some of that growth up to 32. And I also think 32 is an interesting technical conversation here.
Yeah,
I have a technical resistance zone at 32 as well. Mark, you convinced me. I like the 32 number.
Yeah, I like the 32 number a little bit to start the week. I mean, I think that's a balanced approach to the situation from cash flow and that.
Do you have any issue going out 40 days here?
I would, well, ideally you get a surge Monday morning and you can go like 3 weeks out. I don't want to be clear out to April monthlies, but You are probably having a high base form if gold is going to on gold itself, if you're going to have a significant move, and then you can adjust if you want.
Yeah, see,
Um,
for me,
because people say, well, things move fast. Look at Bitcoin. Bitcoin gave you a high base for like 5, 6 days
Bitcoin
before
gave
it,
two
and
beautiful
so
patterns,
it's
but
like even in Bitcoin's craziness, it gave you a sign. I didn't trust it because Bitcoin high bases hadn't done well in the last couple of years, but it gave you one, right? So things don't just go straight up. They usually give you some time to adjust.
I have I personally have no problem with the 40-day number. That's the number I'm looking at. It allows you to get to 32 without an upward movement in price and still get your cash flow. That's number one. Number two, to me, this is not an expiration conversation. Like, to me, I cover because we might get some downward movement in price, and I'll be able to buy back those options anyways, regardless if you sold them 3 weeks out or 5 weeks out. Does that make sense?
Yeah, no, I think it's reasonable. I think it's a reasonable approach. And adding to gold, I don't think the gold needs the dollar to fall to go up. I think there are things just happening in the gold space right now, right? But a falling dollar don't hurt.
No, a falling dollar certainly does help, but I would agree with you. If the dollars, even if the dollar stays neutral, I still would have a positive take on gold.
And dollar had some things go on this week. I mean, you had unemployment week, numbers came in strong yet again. People that scoffed at the numbers had the same arguments again. But it wasn't really economic data this week out of the United States that moved the dollar. It was things going around the world. Matt, what were some of those weights on the dollar, positive things for other currencies?
Well, you certainly did have some economic reports out of the U.S. that were important, and even though I do appreciate your labor market at B, but they revised last month. So let's give the news though. Labor market numbers on Friday came out. They were mixed. Average hourly earnings came down to 0.1%. Expectation was 0.2. That alleviates a little bit of the pressure on the inflationary conversation. Non-farm payroll, which is the labor market numbers, they came in at 275,000, which was well above the 198,000 expectation. That the news itself is obviously going to be headline worthy when you get 275,000 jobs against a 198,000 expectation. But again, one of the things we did see this week on the labor market numbers that really kind of led it to being a mixed report was last month's numbers were revised downwards yet again for, I think, like the 10th out of the last 12th labor market news is like revised to the downside. I would fully expect the 275 to get revised next month to the downside, and it will still be a positive thing for the labor market, given the fact that 275,000 is an outlandish number, quite frankly. Curious, even with the beat here on labor market, the unemployment rate actually went up to 3.9%. We were dealing with the 3.7% labor market number. We now have a 3.9%. And I got a few questions regarding that, just trying to understand why you would have such a beat on the labor market numbers, but the unemployment rate actually go up quite aggressively. I'd say 2 percentage points or 0.2 percentage points is a fairly aggressive move on the labor market numbers on a month-to-month perspective. Simple reality is typically when you see something like this where you got a strong month-over-month number that comes in, but you also have the unemployment rate go up, that is usually a sign that the participation rate improved as well. And so you have more participation, and so you're going to have a little bit more of an unemployment rate because you have more participation. But I would give it in general mixed data from a labor market perspective. You also had Chairman Powell last week also testify on the Hill in his semi-annual testimony that he gives to the Senate. And man, I watched the first day of his testimony. I caught a little bit of the second day. I'll just say this. I'm disappointed in our elected officials and the questions they ask the chairman of the central bank. You have an ability to sit down with the chairman of the central bank of the United States dollar And instead of trying to figure out solutions to our currency issues or solutions to our debt issue, or trying to understand the interest rate environment versus, the cost that has been impacting so many Americans over the last couple of years, they're asking pure, unadulterated political questions. And personally, I think it's disgusting. I just wanted to say that in the podcast. But as for Chairman Powell here, I didn't think he said anything new because I don't think he had an
No.
opportunity to say anything new. And so there wasn't really anything that I think we need to update coming out of Powell's semi-annual testimony. Outside of that, those were the two major news stories in the U.S. last week. Now, when you go into the dollar and you're talking about, okay, now why is the dollar moving? Why is the dollar moving? Not just from the labor market news, because Mark, when you look at the labor market news, dollars should be up on the labor market news. Dollars should be up on the ISM manufacturing data last week, but it wasn't. It was down fairly aggressively. So what else is happening out there? Well, you also had the Bank of Japan come out recently and talk about potentially increasing their interest rate, which will put a lot of demand on the Bank of Japan. I think that's having a bigger impact than even the European news that came out last week. Because if the Bank of Japan is going to increase demand due to increasing wages in Japan, that's outlandish behavior for the Bank of Japan. They never raise
and if you don't know the backdrop there,
ever.
Bank of Japan has not raised interest rates in like 20 years.
But no, they can't. Like they literally can't. But
they probably won't here either, right?
No, they won't. They'll keep it at -1, but it's how the banks do it, Mark. There's so many tools in their toolbox that they can do this with the quantitative easing, they can do this with this debt policy, they can close down the banks by putting liquidity requirements on them, they can enhance the banks by reducing liquidity requirements. And so there's a lot of different things the central bank can do to move the interest rate conversation without impacting the actual interest rate. Think about it like this. All Jay Powell has to do is breathe wrong in an elevator in New York City, and that can move the interest rate conversation. So the Bank of Japan certainly will not be raising interest rates, but they could do some of the things on the other side of the equation to modify the overnight lending rate a little bit. I think that's playing a large role on the currency side of the equation. You also had Europe come out, which was amazing to me. Europe came out on Thursday, and they kept their monetary policy the exact same on Thursday at 4.5%. But all of a sudden, Europe is hinting at dropping interest rates in front of the United States. And that is interesting to me because Europe, they're behind us on their inflationary battle, but they're also behind us on the economic recovery. The U.S. economy is right around 3% GDP growth right now. Europe's right around 0.6% GDP growth right now. And so I do think what you're seeing out of Europe is much more of a capitulation against the economic conversation versus dropping interest rates due to declaring victory on inflation. I think this is a major mistake out of the Eurozone. I think they should be vigilant against inflation. They do not have the same argument against inflation that the United States has right now. The United States has a little bit more lag and I'll say latitude regarding their interest rate conversation and their inflation. But I think this is a mistake out of Europe, quite frankly. I think Christine Lagarde is putting short-term in front of long-term. I think it's a mistake. We'll see how that plays out down the road, though. That was it from a macro perspective on the banks last week. Jay Powell on the Hill. Should I even mention Canada? They really didn't say anything or update anything out of Canada. So you had Chairman Powell on the Hill last week. Then you had the Bank of Japan news. Then you had the European news. All in all, a little bit of a downward movement in price for the dollar. And usually when the dollar goes down, everything you like is usually a little bit better.
No, it's not a bad look for anything if the dollar drops. Ugly chart. We'll see how the dollar goes. It's going to be interesting. In an inflationary week, as we've talked about mentioned a few times, Got CPI data on Tuesday. Sometimes, Matt, CPI data will come out on a Thursday, sometimes a Wednesday, sometimes a Tuesday. It's not like the unemployment report where it is the first Friday of the month. But Tuesday. Tuesday is when we get that CPI data. That's the
It
big.
feels normal. Tuesday feels normal.
I
Tuesday CPI reports, those are normal. Friday,
I like it. Let's get the big one out of the way right off the bat, and then we can.
I would much rather get the big news out of the way at the first on a Monday or Tuesday, so that we can kind of focus on just the trading environment for the rest of the week. I like it when that. I don't like it when you're kind of hesitating because you got an important labor market news on Friday and it's stressing you out on a Wednesday, for example. I like it when you get that hot and heavy news out at the first of the week.
Yeah, I agree 1,000%.
If we get a hot CPI print, market goes down, it's going to make the trading week a little bit easier on the bull side of the equation. You're going to wait for volatility to settle in. If you get a spark of momentum, you can kind of anchor against that for the rest of the week. So I do prefer an economic report at the beginning of the week versus the ending of the week, but everybody has their little likes and wishes here. CPI report, certainly the most important report of the week this week. PPI report, not as important, obviously, but it's going to kind of go in line there. We got CPI expectations coming out. Expectations right around 0.3, 0.4%, which is right where we were last month. Again, I think even the expectations at 0.3, 0.4%, I think is concerning enough, quite frankly. And so you got to miss on this one. And a miss obviously being good, miss being inflation's coming down. So I do think based on the expectations being 0.3, 0.4%, which was very similar to last month, and we were concerned with last month's report, you get another 0.3, 0.4%. So if you come in line this month, I think that's concerning. I don't think that's a positive thing. I think you got to miss her.
Yeah, no, indeed. And obviously that's going to have ramifications on all kinds of stuff, right? Dollar yields, equities, commodities, so forth. Let's talk equities for a few minutes as we head towards the tail end of our show. Normally we start with equities. Normally we spend a lot of time on equities. Most of the story in equities this week, Matt, are one of technical aspects where things aren't quite as clean as they once were. Now, you and I, about 3-4 weeks ago, were like, we expect consolidation. We expect a breather, period. You still feel that way?
I think we were right on the consolidation.
I think we were too.
Even though the market has obviously continued its bullish strength here, but it's not continuing the bullish strength with the same degree of veracity that it had. Breakouts have been concerning recently.
They haven't worked.
Seen follow through on breakout analysis, but we also haven't seen violations of support either. I think what you're seeing is some battles happening in the broader market that is basically creating a fading bullish trend. But you have some fascinating stories against the backdrop of this consistent trend. And I would describe this as a consistent trend. I would not describe the breakouts recently as consistent, but I would describe the trend as consistent. This has been one of the most consistent trends we've seen in years and years and years, quite frankly. But it does have some weakness at the top, quite frankly. The leadership of the market is starting to show increasing volatility, quite frankly. And those are words, Mark, I have not said in a long time, quite frankly, in terms of that increasing volatility at the top end of a chart. But if there's one thing I do not like in technical analysis, I do not like increasing volatility at the top end of charts, because that shows me that there's battles being played out at the top end of a trend. And you don't want to see the profit-taking battle of Wall Street getting aggressive against everybody around the world, trying to squeeze out a little bit of this semiconductor trade here. But when you're looking at the news specifically over the last 24 hours, not 24 hours, but over the last 24 hours in the market history. So looking at Friday, Thursday type of data, we record the podcast on Sunday mornings. The semiconductors, as looked at through SMH, currently has what I would describe as a fairly impressive bearish engulfing candlestick pattern. A bearish engulfing candlestick pattern is when the previous candle is completely engulfed by the body of the candle right now. And so you got a really substantial bearish engulfing pattern at the top end of the trend here. That signifies that you're seeing you've not only lost momentum, that the bears initiated momentum here. And you might be saying, okay, well, yeah, that it's been a great trend in the semiconductors, and it has been a amazing trend in the semiconductors. But I think it's time to tap the brakes here on the semiconductors in the short term, Mark.
Oh, I 1,000% agree. Like,
I think we're looking at overextended pullback analysis right now. I'm not ready to call this the end of a trend, but I am ready to call this the top of the current leg in the trend. I'd like to see that settle down and settle in. And typically when you want to see it settle down and settle in, you're talking about retracement analysis. And so I do see some scenarios this week where we're talking about pullbacks in the semiconductors and improving conditions in stocks that have been left behind. And I know this is going to be shocking to hear, but Apple and Google have been kind of left behind this year so far.
We oftentimes talk about rotation, right? And normally you're talking about rotating for money from one sector to another, one industry to another, right? Because cumulatively, those sectors and industry, represent a chunk of the market. Money. Apple is as big as some freaking sectors.
It certainly is in the Russell 2000.
Yeah, and so when you talk about the easiest place to look for a potential rotation, a rotation into Apple is like a rotation into a sector.
I kind of feel like we're going through the Max 7 rotation, right?
Yeah.
Where you got stocks, and don't get me wrong, I don't have a bad thing to say about Meta and Amazon, but they don't have great, compelling patterns right now. But I don't have a negative thing to say. Both bullish, both good. Love Amazon, love Meta. But you have had separation in Mag 7, Mark. You certainly have. When you're looking at Mag 7, you've had so much separation in Mag 7, Mark, that the people that created the name Mag 7 want to call it the Mag 4. I won't let them. You can't kick out things just because they didn't pan out the way you wanted it to.
For like 2 months, the instant gratification society we live in.
Yeah, we can't allow them to do that. So we'll keep it at Mag 7. But my general point is, Mark, you got Amazon here, which is an amazing stock. Love Amazon. I love this company. But you're also starting to come into some overhead that is significant, that you could definitely see some development here on Amazon. When you're looking at, NVIDIA, for example, nobody's going to make an argument that NVIDIA is not a great, amazing company. But I will make an argument that in the short term, it looks like the froth got a little bit too aggressive. And now we're looking at pullback analysis that if we get a doji at the 9 EMA, we might have something to talk about. But you are seeing shifting volatility here. And so it's not like you're going to go fight NVIDIA at the first of the...
Yeah, that candle don't look like any of the previous ones, right?
No, and so I think this week could be as simple as this. You get a little bit of pullback in semiconductors. And again, a pullback in semiconductors, I'm still going to talk about them as bullish. I'm going to look at that as a bullish opportunity from a trader's perspective. But you just got a little bit of shifting volatility to start.
It's hard to do anything this week.
Start the week. That's the conversation. It's hard to look at semiconductors at the beginning of the week. It might be really good to look at semiconductors by Wednesday, Thursday, or Friday, but you got to let that play out personally. And so I could see this week being as simple as this. You get some rotation from the semiconductors that comes into Apple, Google, Tesla, the Russell 2000, which looks very, very good from a potential breakout perspective against 2100. And so I do see this week as one of those weeks that we get some development in semiconductors. We get some development in stocks that have been left behind in the conversation. Google, Tesla, Apple, just kind of naming some of those Mag 7 components. So pullback analysis in semiconductors, consolidation analysis at the top end of the market, a little rotation into companies that have left behind, and then obviously the gold conversation. But I just see this week as a little bit of a development week, quite frankly.
Yeah, I know. I mean, it's just Apple looks far more interesting to me than semiconductors. It just does. Like
And
and that's not even just like, oh, I like things that are down. Like it's just.
well, let me be clear. Like Apple to me is not a situation where it's like, ooh, let's go out and pick up Apple. I think you could see the beginning of development of reversal patterns here in Apple. And so I don't think this is a week where, oh, let's go get Apple at the tick at the low point. I think that would be a mistake. You violated way too much support in Apple. You've given up way too much edge and you got momentum to the downside. But you're also coming into a support level. And so I think we could be talking about Apple on the bull side of the equation within a week or 2 weeks from now. But going into this week against that trend, I think you want to see a little bit more development. But Mark, my opinion on semiconductors.
See, I'll say something now on the podcast that I would never say on the halftime report. I think you can add Apple marginally here. Do you go all in? Do you push the ship? I think you can tickle it, though. I think you can tickle it. I think you can do
It
a
depends
small.
on style of trader. No, like day traders can tickle it because of the support level, the intraday analysis. Swing traders, you can't go against trends as swing traders. So
No, no, it's swing trading, but
like,
I'm not a swing trader,
no,
so
that violates every single rule known to man as a swing trader. So
I'm talking from like more of a. I want to add some Apple. I don't
if
own any Apple.
if you're if you're you could play a contrarian trade there on Apple, but that's not something I would recommend. Like even to professionals, I wouldn't recommend that.
I'm not talking from a trading point of view. I'm talking
well,
just.
if you're looking to build a position in Apple,
Yeah, I think this is a good point.
Haven't been able to participate. Yeah, I don't have a.
I think this is a good point. That's the point I'm coming at from when I say that.
I got no problem. You want to start?
Oh, if you're adding Apple here and I'm going to have a stop loss. No. That's you wait for development.
Yeah. We're talking two different, completely languages on that conversation. One's a trading conversation. The other one's like let's start building a position.
I think this is a pretty good. If I wanted to start building a longer term position,
I think Apple is a very interesting candidate against the backdrop of the market. It's not the number one company by market cap, but it still has the largest moat in the marketplace, in my opinion, is Apple. So,
I mean, I want to ask an honest question, and I'm not being sarcastic when I say this. Like, what is more likely? Not that either of them necessarily likely in any short term. Someone usurps the iPhone dominance, or someone comes up with a better AI chip to usurp NVIDIA's dominance.
Mark, there's scenarios on the AI development conversation. They're building out so fast, like at a historic pace here. To answer honestly, I would say it's easier to overtake NVIDIA in terms of AI dominance.
Yeah, just from
than smartphones and Apple. But Apple and smartphones. Apple's obviously a much. It's not just smartphones.
Yeah, that was meant to be a pro
revenue, but
Apple argument.
I would say it's easier for a technology company in a build out of an entirely new technology for somebody to come up with something so outlandishly new that it changes the conversation than somebody coming in and trying to compete in a space that Apple is utterly dominant in.
Yeah, I just wanted to demonstrate how, Apple's mode is insane.
Yeah, NVIDIA is dominant and dominant in their space, but they're first to position in a space that they are spending, not NVIDIA, but semiconductor companies in general are spending literally billions upon billions upon billions in R&D. So don't get shocked if in 6 months from now, for example, a company like Marvell, Broadcom,
who knows, dude, right?
That comes in or Mark, not even public facing. Don't be shocked if a private company comes out with new technology. So that would not shock me. It would surprise me. Don't get me wrong. NVIDIA's got a really large head start on this conversation, but it wouldn't shock me. This is a 10-year AI storyline playing out.
In which the battles are raging, right?
Yeah. It's a storyline if any company can eat into Apple's dominance. That's a storyline. So I would have to say it would be easier for somebody to become a legitimate competitor to NVIDIA, not just from a hype perspective. AMD don't get me wrong, love AMD, but they're more hype when it comes to competition against NVIDIA. NVIDIA has a large head start there, but I would answer Apple. Apple's mode is the number one mode in the world, in my opinion.
Yeah, and
I would say
so
Microsoft second, by the way.
I
NVIDIA.
just wanted to like make a pro Apple argument that I knew I wouldn't have to make because I knew you would make it for me.
I would say Amazon has a larger moat too than NVIDIA. NVIDIA's growth potential is just, quite frankly, out of this world. But the moat conversation, it's hard to have a moat conversation when you're and I don't want to say this because it's NVIDIA and it's an amazing company. I love the company. I think they're an amazing storyline that's going to continue. But when it comes to the fundamental moat conversation, I got NVIDIA being dominant in one field. Apple, Microsoft, Amazon, Meta, Google are dominant in all fields.
Mm-hmm.
And that's where the moat conversation comes in. And so, and again, I don't want to say anything negative about NVIDIA, but when it comes to the moat conversation, I do think the other components in Max 7 have a better argument for a moat perspective than NVIDIA does.
Yeah, I know. And it's just like Apple. I mean, we forget sometimes, right? Sometimes even as an investors, we get so caught up in this that when there's like, oh, Apple is down X million %. Let's remember the case, right? Let's remember the case.
And it doesn't mean Apple can't go down further.
No, of course not.
But what I do think is interesting about the Apple conversation is you are setting at a very important support at 170. And so if there's going to be a time for us to have a conversation on Apple, it might be when it's kissing up against the 20 monthly, against a previous pivot at 170, where you could certainly see reversal situations play out. But Mark, as somebody who has studied reversal analysis probably more than the average person, I would say, this is not a time where you just say this is reversing, because
no, mate. Oh, no.
170, you could be at 155, at 150. Like this can continue on Apple. Yeah. And so I think it's one of those very interesting conversations on Apple where you could definitely see development here. And that's why I'm like, when you talk about building a position, I'm like, yeah, for the long-term side of the equation, yeah, start adding shares, start tickling, start building.
Yeah, and that's the thing. Let's say I have 10 units to add. Yeah. Like my max position in Apple will be 10 units. Because don't think of it in shares, think of it in I'm going to add a unit, right? Yeah. Giving myself room to add if that development adds some more, or if it goes down some more.
3 months from now, we're talking about Apple at 200. Don't be surprised.
Well, at least I did something, right?
Yeah. So I have an opinion at 170. I think it's.
I have an opinion at 170 too.
That holds here, but I also am always going to respect volatility to the downside.
I like this conversation. I like this conversation. These are good conversations to have. Rut's breaking out.
One last thing.
Yeah.
Just on the semiconductors, because I really do want this to, just to understand a little bit of the volatility we did see on Friday, because it was a little bit more than what we do see. This was not just a profit-taking moment.
Oh, yeah. I'm glad you wrote that, because there was outside of just that.
There was news.
We had news that sold off, which was like, oh my gosh, when's the last time that happened in some?
Yeah, you had the first legitimate drop in guidance in one of the semiconductor AI names that we've seen in recent history. Now, Marvell has not been the standout like AMD, NVIDIA, Broadcom, like all those companies in the semiconductor.
But they're in the space and they're involved.
They are absolutely in the conversation, especially on the AI side of the equation. So Marvell came out with an earnings report on Thursday, and Marvell, their raw numbers were not bad, but they did drop their guidance quite aggressively for 2024, for the first quarter of 2024. And so you did have news coming out on Marvell with the drop in forward guidance that was kind of the causation for the volatility. And then you also had Broadcom come out, and they came in with what I would describe as a legitimate beat on EPS pretty decent on the revenue side, but mixed guidance here. And as you can see, a little bit of, like, Mark, you want to talk about a poster child for shifting volatility, the top end of a chart here. That's kind of what Broadcom's going through right now. Big up, big down, big up, big down, big up, big down.
I want to play devil's advocate for a second.
Yeah, go ahead.
And I've brought this up at different times publicly. I've brought it up privately with you several times. It has nothing to do with the AI one day story. It has to do with the NVIDIA dominance story. And I've used the phrase, is NVIDIA a special situation? Because we've seen semiconductors move, AMD and others, like they're NVIDIA. Like they've already done it. They've already done it. NVIDIA's done it. They've shown it.
The question is NVIDIA a unicorn? The answer is yes.
Yeah. And so if that is the case, some of these semiconductors got to give back some of these gains. Not NVIDIA necessarily.
So obviously, NVIDIA has broad shoulders and they've carried a lot of stocks, right? But now we start to see those stocks, the real versus the not real, Mark.
Yeah.
And the real versus the not real is not told by just a simple trend that NVIDIA is obviously carrying a lot of weight out there. It's told through the fundamental story of earnings.
Yeah, because AMD did not have a good earnings. Marvell did not have a good earnings. You have not seen
had a good but not great. But like you got great. You got to be great here. You're priced for perfection. You got to be great here.
And so NVIDIA delivers. NVIDIA may be a unicorn. NVIDIA may dominate market share for a long time.
I didn't have any concern with NVIDIA's earnings report.
No, because it was outstanding.
It was outstanding.
And yet we're not seeing that replicated in other places. And yet those stocks have gained like they were.
Question. In the semiconductors here, obviously you got some things getting carried. Marvell, for example, obviously is getting carried a little bit here. Broadcom, maybe getting carried a little bit here. I wouldn't argue Taiwan Semiconductor.
No, Taiwan, another special one.
I wouldn't argue NVIDIA is getting carried.
No,
I think you could even argue AMD's getting carried a little bit. I
wouldn't argue. I would explicitly state AMD is a joke at its price level. Like they haven't shown anything yet.
It's
not that AMD is a joke as a company.
No. I totally get it. You're talking fundamentals there.
I'm talking the valuation of AMD right now.
PE ratio is legitimately. It's 400, and that's improving. But you're right, Mark. It's kind of outlandish from a fundamental perspective. But my question to you is, if we do get a pullback here, like a legitimate retracement, right? I'm talking a textbook standardized 3-4 day pullback, where it's not just days, but it comes down, kisses off rising 20 moving averages instead of rising 9. That type of a pullback. You got a lot of scenarios in the semiconductors that would look outstanding in pullback.
Oh, as a trader, you still hit that.
So my question to you, therefore, is in these pullback scenarios as a trader, put your Coach Matt hat on for a second. Would you be looking at NVIDIA, Taiwan Semiconductors, Applied Materials, things that you feel are...
Applied Materials is another good exception. Yes.
Versus something like, take an AMD, for example. That
my unbridled anger, skepticism, whatever, has to do with the producers. It does not apply to Taiwan Semi. It does not apply to Applied Materials, who are in different parts of the chain. And it certainly does not apply to NVIDIA. It has to do with competitors to NVIDIA who have went to the moon without showing anything. It's silly, and that will correct. It is just a matter of time. So if I was looking for a trade, Taiwan, Applied Materials, NVIDIA, if those hit them. And even if you get a great setup, Well, it doesn't matter. Like, you could have the biggest garbage company in the world, which these companies are not. They're just overvalued.
We're talking about some of the best companies in the world,
you,
right?
Nobody
around the world is going to make an argument against. They might say
Marvell's a great company
on Taiwan Semiconductor. They might say the technical conversation is outlandish and they're not here for it. That's fine. Yeah. Nobody's going to make an argument that Taiwan Semiconductor is a bad company. They literally are the gas.
Marvell's not a bad company. Marvell's not a bad company.
No, Marvell's a great company. They had a problem with their with guidance in the short term. That does like Marvell's, but I'm just saying that type of volatility can lead to more than just a 3-day pullback scenario in those types of names. I think for me, I think there's going to be some really compelling technical setups in the semiconductors, not to start this week, but it could be by the end of this week. And you're going to get a lot of names that set up here, in my estimation. In those names that set up, I think the ones we focus on are the ones that have compelling earnings stories, not just
technical and stories. That's the point of it all.
And that's the takeaway from the last 20-minute conversation.
No, it's a good conversation though, right? Because people get caught up. Oh, it's going up. It's going to. Like, yeah, dude, we got a little bit of mania going on right now, right?
We do.
We got a little bit of mania going on right now, and you just gotta. There's nothing wrong with that, because guess what? We've had mania before. We'll have it again.
I'd rather see mania than what we went through.
Yes, I would rather see that too. But you just got to be careful in selection of mania, and then pay attention to those kind of candles that say, all right, maybe let's hold back for a couple days here, right? Yeah,
you can't say all semiconductors are created equal
because they're not.
Simply because their trends are created equal.
Not all companies are equal. Not all,
Listen, the rising tide carries everything in the market,
and that is what is happening on semiconductors. And when you have something like Marvell happen.
But that's why I think this is such a compelling conversation right now, is because we have not had the data necessary in recent history to even talk about pullback analysis within the semiconductors. Now you're overextended. You're seeing shifting volatility at the top end of the charts. You could certainly see a compelling retracement happening here. And in that retracement, again, my advice would be separate the haves and the have-nots in retracements here.
And make no mistake, do not construe this as a bearish opportunity. If there is a bearish opportunity in semiconductors, it's like 4 or 5 weeks from now, because unfortunately, bears, that's how long it takes to set up good stuff.
Yeah, and then you got to be quick.
And it's not fair to bears. It's not fair to bears that good bearish patterns take longer to develop than good bullish patterns. It's not. But guess what? That's reality.
Constantly annoy me with their.
I know, right? I feel worse about that.
I would feel a little bit worse for them, but I don't.
Like, it just takes longer to set up bearish situations. It just does. It's harder to break uptrends. It's trying to guess the end of an uptrend. Good luck. Right? Good luck.
My last 4 bearish trades, most of them put on for hedging purposes, made me regret it.
Yeah, listen, I get it.
And we just say this: don't go against parabolic uptrends. I don't.
You just don't like it. I get
parabolic uptrends.
I've tried to, and was I right in the long term? Yeah, I was. Like, right? Like, I think some of these AMD type things are coming down. And I've tried to fade the GameStop Beyond Meat type of moves before. I always get blown out. I just do. I've stopped doing it. Like,
and you can pull up any fad in the last 15 years in the market, and what I will say is the AI conversation is different.
Yeah, just not.
Trying to go against those trends was damn near impossible.
Yeah, you couldn't even go against those. So, like, what are you going to do when there's an AI thing that, it sparks the genuine imagination of all humans? That's a hard one to try to fade, right? So, all right, cool. Russell going to hold this breakout, bro?
Gun to head?
I'm curious. Just like, because obviously you don't know, but I'm curious.
I would say the Russell 2000 has a very compelling breakout situation developing that is one of the ones in the market this week that I do think we got to focus on a little bit. At the beginning of the week, like we're talking cover call analysis in gold being it's so overextended. We're going to be talking about retracement analysis in semiconductors. We're going to be talking about, does Google hold the 200 SMA? Does Apple hold 170? All of these are development conversations. What does not need to develop, because we've been talking about the development here for the last couple of weeks, is the 2100 breakout in the Russell 2000. It's really clean. It's done nothing wrong. When you look at the Russell 2000 on the short term, think about the overhead, the horizontal overhead at 2100, and then the data going into that 2100. Mark, you have a very compelling argument here, given the fact that you are seeing no volatility here against support. I have seen volatility against support in the top areas of the market. It is not the exact same today as it was last week with intraday support levels holding. But when you're looking at the Russell 2000 here, it does not want to budge against that 9 EMA going into that horizontal 2100 zone. And so when I'm looking at the Russell 2000 here, I got this as a mid-tier breakout opportunity. It's similar to the mid-tier 2K breakout. I think this is probably even more compelling of a mid-tier breakout in my estimation than when it did break 2K. And the difference, when you look at it on a chart, the difference is really, really easy to see. So I strongly suggest, if you're listening to the podcast, pull up the Russell 2000 on a weekly chart. The difference, as we were running in November to December into 2K, is you ran from 1638 into 2K in 7 weeks, a parabolic uptrend, and it's hard to say it's just going to run and that. And what you got is you got another week up, and then everything came back down. But the difference this go around, Mark, is you are now increasing that overall support, not from 1638, but you're going now into the 2100 breakout, coming from right around, I'll give it the wick treatment, right around 1900. And so now you're running it only about 200 points into a breakout, whereas the first time you ran about 350 points into the breakout. If you're looking at this from a potential average yield or the behavior of technical analysis perspective, you would say this thing has the legs to get up into 2200 or 2250 before you get overextended on the weekly chart. And so, yeah, I do like the mid-tier opportunity.
I think you hit it. I think I think you hit it. Like, I think inflation.
Only thing, before you just go hit
it.
Before you do that.
See, we need a sound effect, dude or girl, in the background that could give me a hit.
Before you do that,
hit it.
I will say you got a wick that tested above the 2100 zone on Friday. It did not hold its head above that water. That tells me something. One wick does not stop a breakout. There's no doubt.
And I would be more concerned if like the whole market got crabby on Friday, right? Like,
no, you know. Listen, what actually transpired is you had labor market news came out and algorithms drove it up on the 275 beat, and then you had some profit taking. I still 2100 zone. I'm discounting the wick to a certain extent, but you do have a wick that did test above it with algorithms on Friday that would maybe change it for some traders to say, let me see a close above 2100. And
that's fine. That's a reasonable thing to say, right?
And so whether you're the individual that just loves the 2100 breakout, or whether you're the individual that would love to see some confirmation here, I don't think either one's bad. I think you can pay for confirmation here. You got a significant overhead. So in my estimation, let's let the top of the market do what the top of the market wants to do this week. Let's let the semiconductors settle in and settle down, and let's let Apple and Google try to build some development and support. And while that conversation happens, let's keep our eye on the prize. Let's see what we can get on the Russell 2000 mid-tier breakout here.
Yeah, my personal plan is I'm planning on doing something if inflationary numbers come in strong. I do, because it's an election year, and I would get those people in line to make sure those numbers came in strong. And so
can you talk to the powers that be about the expectations that come out then? Can we?
Well, the expectations
the lower too. I mean,
no. You want those expectations to be bad.
I'm just saying, if we're
you want the
like
expectations to be bad, that way people are
if
relieved.
you want United States government, if you are manipulating data right now, you're getting caught over and over. You're not being very smart about it. You need to come to the Trading Justice podcast, hire us, and we will figure out how to manipulate that data a little bit more accurately so you don't get busted all the time.
So when the manipulated data comes out on Tuesday and is favorable, I think that's a good day that could set up really well for a Russell breakout, right? So, hey, listen, you could be a conspiracy theorist and learn how to play it tactically without being bitter.
Listen, I laugh a little bit of the constant manipulation of data because I feel like governments have been manipulating data since I've been born. The U.S. has done it. It doesn't matter who the president is. It doesn't matter who Congress is. They manipulated data under Trump. They manipulated data under Biden. They manipulated data under Obama. They manipulated data under Bush. Oh, hell, don't get me started on the data that was manipulated in 1999 under Clinton. They've been manipulating data ever since they've had markets out there. And the U.S. is not even the best at manipulating data. China is really good at manipulating data, but they're so outlandish these days, you can't even look at their economic reports. They're all terrible at manipulating data.
Oh, if we were in China right now, we would be having knocks on my door and they'd be taking me away for questioning their manipulation.
We would not be allowed to say what we just said.
Yeah, go USA on that one. Thanks China, for not arresting me. I think that's a good time to hit the, CPI on Tuesday. That's the nice thing about Tuesday reports, right? You don't have to, it's like, oh, I don't want to hit on Monday, wait till Tuesday.
If we get a positive response, if we get a positive equity response on the inflationary data on Tuesday, and that equates to a breakout in the Russell 2000, I think we might be able to see a little momentum here.
All right, cool. Well, listen, good night. Nice, lively conversations. I've really, really enjoyed them. Matt, wrap us up. Send us out.
Yeah, if you love the podcast, best way to support the podcast is to obviously give us a nice little like and shares on our YouTube channel at Tackle Trading, or just a nice little 5-star review on iTunes. That helps out as well. If you need anything from us at Tackle Trading, who is the sponsor of the Trading Justice podcast, you can always hit us up at team@tackletrading.com. And if you're looking for an amazing community of like-minded individuals always helping each other out, navigating this financial world together, you can always sign up for a free pro trial of Tackle Trading and test out all the goodies our pro members get, from scouting reports to trader lounges to nightly shows, daily applications, scouting reports, you name it. You can go over there to tackletrading.com, hit the join now, and you can sign up for a free trial for a 15-day trial on us. $97 a month after that. Pays for itself, ladies and gentlemen. Hopefully we see you at Tackle Trading, but we thank you so much for being the best part of Trading Justice, and that's always being the listeners. We are nothing without you, so I just want to show us some appreciation for the listeners. Appreciate you guys, and let us know if you need anything.
Listen, have a wonderful week, everyone.
Later, team.